the first time in 4 years, the Fed Reserve has cut its interest rates. The federal funds rate was slashed by 50 basis points at once. This step is justified not only by the steady slowdown in inflation, but also by the US Central Bank's fears about the possible slide of the economy into recession. But what's really surprising here is the reaction of markets. The US dollar immediately rose in response and even developed a notable rally. The US dollar index, which displays the position of the greenback against a basket of 6 major currencies, spiked to 101.40 after the announcement of the Fed's policy decision. Although then it quickly declined to the previous level of 100.50, the lowest level in 14 months. The reason for such a market reaction is statements by Jerome Powell. The Federal Reserve Chairman immediately warned markets that they should not rely on maintaining the same pace of monetary easing. Citing his words, the central bank is considering cutting interest rates by another 50 basis points before the end of this year. But this will happen gradually. There are exactly 2 meetings left before the end of the year, so the funds rate will be cut by 25 basis points at each of them. However, everything will depend on macroeconomic dynamics. Considering that the pace of inflation slowdown is likely to decelerate, the regulator could lower its interest rates only once before the year end. And this is precisely why the US dollar started to strengthen, as markets were expecting monetary easing at a rapid pace. Today the focus is on the Bank of England. Apparently, it will set the tone for further policy moves of major central banks. The British regulator is likely to leave its interest rates unchanged at 5% per annum. With the Federal Reserve System beginning to lower interest rates, such a step will give impetus to the pound sterling. Through the US dollar index, it will push the single European currency up. On the chart of the euro-dollar pair, we see high volatility due to the intense information environment. As a result, the price has almost reached the level of 1.1200. The euro-dollar pair finished the previous session at the opening levels. Still, the market sentiment to sell the US dollar is obvious. To extend its growth, the instrument has to settle above 1.1150, and this is exactly what's happening at the moment of recording this video. It means that the euro-dollar pair could climb above the high of the medium-term trend located in the trend channel between 1.1200 and 1.1280. Meanwhile, the euro market has come to a standstill, trying to grasp what exactly is happening in the Middle East. Brent oil prices are having an upward correction from a local low. Meanwhile, the Brent price has strengthened by almost 7.5%. However, according to technical analysis, the downtrend remains relevant. Nevertheless, when considering further corrections, technical analysis suggests the price may move towards $76 per barrel. New explosions in Lebanon pose grave risks over escalating tensions in the world's main oil-producing region. In theory, this should be driving oil prices sharply up. However, key countries in the region are refraining from making any statements, and this primarily concerns Iran, which is behaving as even nothing is happening at all. As a result, the market is in a suspense, and thus crude oil depends on the political factors. Here is the latest on the Russian ruble. After 2 days of stagnation, the ruble suddenly weakened. This indicates that the Russian currency is gradually becoming dependent on the yuan. Amid the speculative activity, the yuan-ruble pair briefly rose above 13.20, which signaled the potential end of a long sideways trading within the range of 12.50 to 13 rubles. However, from a technical viewpoint, a shift in the trading interests in favor of buyers will only be confirmed if the price settles above 13 rubles by the end of the week. Otherwise, the instrument may return to its previous range. The reason for this is that China hadn't extended a holiday period until yesterday. On a Monday and Tuesday, neither banks nor exchanges operated in China, leading to a temporary yuan liquidity shortage. As a result, during yesterday's market opening, demand significantly outspurred supply, causing the ruble to lose ground. However, this is merely a local surge with a short-term impact. Once demand and supply are in balance, the yuan-ruble pair is expected to pull back. That's all for now. We continue to monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news. See you soon!